Happy Wednesday, everyone. Hope you're having a great week so far. Spring's sneaking up, and I'm over here just trying not to drown in pollen or overpay for eggs, which we'll get into in a second. But first, let's dive into what's happening in the housing and mortgage world. There's plenty to unpack today. First up, something straight out of a sci-fi movie. HUD's been caught whispering about using cryptocurrency and blockchain to track federal grants. Yep, according to ProPublica, internal chats show that they're exploring stablecoins pegged to the dollar. One HUD official, Irvin Dennis, is all in, pitching it as a potential test run for bigger federal use. But not everyone's sold. Some staff are waving red flags, calling it unregulated chaos and worrying about volatility sneaking into the housing market. Spokesperson says it's just educational talk for now. There's no real plans, but still, imagine signing your mortgage docs and tossing in a Bitcoin tip. Wild times ahead, right? Now let's talk about buyers because they're feeling the heat. A Bankrate survey says that 81% of aspiring homeowners are stressing over down payments and closing costs. For 52%, it's a very significant roadblock, and 29% say it's somewhat significant. Redfin's got the numbers to back it up. Median down payments are at $63,188, which is up 7.5% from last year, or about $4,000 more. With the median home price sitting at $428,000, that's a 16.3% chunk up front. Oof. If you're a buyer or a realtor with clients staring at that mountain, let's chat. I've got tools to make it less daunting, from down payment assistance all the way to some creative financing. We'll figure it out together. Shifting gears to the economy. CPI numbers dropped this morning and they're pretty friendly. Headline inflation's down to 2.8% year over year from 3%, beating estimates by a tenth. Core CPI, stripping out food and energy, fell to 3.1% from 3.3%, which is also a tenth better than expected. Shelter's still the big player at 44% of the core reading, which is still down from 4.4% down to 4.24%. Here's the kicker though, eggs. Up 10.4% in a month. They're basically the caviar of breakfast now, driving 2/3 of the food bump. Energy was chill, up just 0.2%, and airline fares actually dropped 4%, hinting at a little economic slowdown. Bond markets though, not impressed. Mortgage-backed securities are down a little bit today, but not too much. Tariffs and uncertainty are keeping things jittery, and rates are still holding around that 6.2% on average. Guess the market's still sipping its coffee, kind of waiting for clarity. But here's the bright spot. Mortgage apps are popping. Purchases jumped 7% this week, up 4% for the year, and refinances, those are also up 16% this week, and a massive 90% increase year over year. Rates are down 17 basis points from last year, and refi volume is now 46% of the action. That's huge. If you've been eyeing a refi, now's the time to strike. I can run the numbers and see if we can save you some cash. Realtors, keep those pre-approvals flowing. Buyers are out there and hunting, and right now, speed is the name of the game. One last tidbit. The Atlanta Fed's tossing out about a negative 2.3% reading, but dig into it and it's mostly export noise from the tariff talk. Normalize that and we're closer to about a 1% growth. It's still sluggish, but it's not a disaster. The Fed's meeting next week, and while rate cuts are unlikely, maybe they'll hint at pausing their balance sheet runoff. That'd be a nice little gift for the bond market. We'll see. Well, that's all I have for you today. Have an excellent rest of your week, and I will see you next Wednesday.